Hello, welcome to this episode of The Financial Incline. I'm your host, John Bogard. Today, I'm thrilled to be joined by Matt Murphy. Matt is a partner at Amend Consulting. Amend is a Cincinnati-based middle-market consulting firm that specializes in working with manufacturing, distribution, and logistics companies. They strive to create lasting business transformation through their three core pillars of people, process, and metrics. More specifically, today, Matt and I discussed the company that they started and eventually exited called Batched. Batched was founded in 2020 and is a software as a service company that specializes in advanced planning and scheduling solutions for manufacturing businesses. Matt and I discussed the process of founding the company, creating the software, scaling the company, and then eventually creating what is known as a synthetic cashless merger with two other companies to create one large company that they packaged together and sold to a larger technology-based company called Amtech. The sale process was not an easy transition. They went through an 18-month process of due diligence and many starts and stops throughout the way. During our discussion, Matt and I discussed how he was able to start this business, how they were able to scale it, when they knew they had something that was sellable, and then how they went about the sales process. Make sure to listen to the end where we discuss what were some things that Matt, looking back on it now, would have potentially done differently throughout this entire process. So for those of you that are business owners that are out there that are looking to either start a company or potentially exit a company, make sure you check out my conversation with Matt Murphy. Hey, Matt, how's it going?
Good, John. How about yourself?
I'm doing well. Doing well. Feels good to reconnect with you after all these
Yeah,
years. But
yeah,
hey,
been a long
so
time.
I gave a brief introduction, let everybody know what we'll be discussing today. But for those that are kind of listening in or watching the podcast episode, would you mind sharing a little bit of your background?
Yeah, so Matt Murphy here, one of the partners over at Amend Consulting, also kind of former CEO of Batch, which we'll talk about in a little bit. But born and raised Cincinnatian, elder guy if you're from Cincinnati, and UC grad twice over, proud Bearcat, and excited to be on here.
Yeah. Well, great. So for those that are unfamiliar with it, would you describe a little bit about Amend Consulting and what you guys do?
Yeah, so Amend Consulting is a middle market management consulting firm based in Cincinnati, mostly clientele kind of Cincinnati based, but we have clients all over the nation. And from a consulting perspective, we do everything from operational excellence projects, digital technology and applications projects, data science, business intelligence, FP&A type work. So we kind of run the gamut of everything from strategy development to strategy execution and all the different kind of silos of the business that might be impacted by that. Um, Mostly manufacturing, kind of make it or move it type companies is what we've talked about. So people in operations, manufacturing, distribution, logistics, but we've really have a client base that kind of spreads a bunch of different industry verticals. A lot of work in the private equity space, in particular, both with the private equity firms themselves and then quite a bit with their various portfolio companies. So have our fingers in a lot of different pies, but pushing around 100 people now. Started in 2005, so it's grown over the years to be about 100 folks, all kind of based in and around Cincinnati.
Yeah, great. It's my understanding you guys have a couple different business lines. So would you mind sharing what some of those are between the consulting, Amend Ventures, and what all encompasses the Amend infrastructure, so to speak?
Yeah, so we're all of the partners very entrepreneurial minded, so we're very opportunity focused as they come across our desk in various shapes and forms. So we have the core Amend consulting business, which is what I was alluding to before. It has about 100 folks working on direct client engagements and projects across the country. We also have spun up over the years. We have a kind of an arm that's called Amend Ventures, which is primarily run and kind of managed by David Veely and Craig Todd, who are the two founding partners of Amend. But that's more of think of it as like a sweat equity or a little bit of direct investment with maybe some opportunities or distressed assets that maybe aren't good fits for consulting work, or it might be in exchange or in lieu of doing consulting work, where we'll take direct investments in those businesses or do a services for equity type arrangement with those investments. So not necessarily venture in the sense of VC, but more of like a sweat equity type firm. And so then we have, on top of that, we'll have, products, or in this case with Batch, what we'll talk about is like we'll spin out different companies, or we'll have products that are built within Amend that might be stood up onto their own and have their own infrastructure, own, management. And those companies may or may not take advantage of some of the core infrastructure that's already in place at Amend, the back office side of things, and the talent pool that exists at Amend.
Yeah. Well, great. So, yeah, like you mentioned, your hands are in a lot of different things at Amend, and very excited to have you on today to discuss Batched, both the start of Batched, the operating the business, and then the exit as well. So, for those that are unfamiliar with it, what exactly is Batched, and how did that get started?
Yeah, sure. So Batched is a SaaS, software as a service planning and scheduling software that we built. It didn't necessarily start out this way, but it ended up being an industry specific software built primarily for the print and packaging industry. And that'll maybe make a little bit more sense as I get into how it got started. But
Yeah.
one of the things at Amend we've been talking about and have really focused on over the last, I'd say, kind of 5-ish years is trying to make the Amend Consulting or the Amend group of companies revenue model more predictable. If you've worked in the professional services space before, it's a lot of dollars for hours games, and
Yes.
you got to hunt all the time, and you're always fighting and clawing to get the next project to make sure you're keeping the team busy and the revenue side of things predictable. But that's ultimately really hard to do with a dollars for hours, purely professional services business.
Right.
And so as we were doing all these different projects with our different customers, we ended up kind of narrowing down to a couple areas where we thought we might have a chance to build a productized service or a product, whether that's software based or otherwise. But we didn't necessarily think at that point it was going to be an entirely separate company, but we knew that scheduling was one of those areas that we had zoned in on. Amend had historically a lot of our manufacturing, or a lot of our client base was manufacturing oriented, and it's like uncanny. You go into a manufacturing site, and inevitably the person who really like knows what's going on is the scheduler, and you get in there and they kind of know all the ins and outs of what's happening, and they're kind of the heartbeat of the organization. They determine what the machines are doing and what the people are doing, and which customers are going to get their orders and which ones aren't going to get their orders, and which customers can wait a day because they're nice, and which customers need their stuff today because they're not nice. And
Right.
so all of our projects in the manufacturing space, almost all of them led to have some sort of like scheduling element to them, which orders go where and which machines are running, which aren't running. And so we knew over the years that that was going to be a spot that we had developed some expertise in. And we knew basically every manufacturing customer struggled to some extent with scheduling. So we were just kind of waiting to get a good opportunity where we could partner up with a client or a customer of ours to try to build a product with them and kind of for them, and build the plane as we fly it.
Yep.
And so we didn't have the Batch name at that point in time, but that was the beginning part of Batch. Was we saw it everywhere. We knew our customers had a problem with it. We were just kind of waiting for a time to try to build it and launch it.
Yeah. Well, great. So you saw the need with some of your existing clients, found the client that it could work best for. When you described Amend, you didn't necessarily say that you guys were software developers. So how did you go about going from idea to execution and getting Batched off the ground?
To be honest, we did it very, very, very poorly at the time. I think if you went back and looked at how we did it, you would take a lot of notes on things not to do, and probably not a lot of notes on what to do. Yep. But that said, we were very fortunate in that the customer we partnered up with was a longtime client of ours, and they were in the print and packaging space. So that's the first kind of clue into why it became an industry specific software. But we had a lot of team members who had, I would call, software adjacent experience. So my background is in data science, industrial management, and data science. So I've done a lot of work from a statistical programming and a data science side. We had tons of people on the team who had that type of experience. We had a lot of people that have done data engineering and business intelligence type projects. So we had quite a bit of exposure and talent in that space, but we didn't have very many. And in fact, I think we had one at the time, but he wasn't really doing software development. We didn't really have any software developers or engineers on the team at all.
Yeah. Yep.
So when we found this client, longstanding client of ours, we basically pitched them on the idea that, hey, we think we can build this into a product. We know we can solve the problem for you. We're not quite sure exactly how we're going to do it, but trust us. And at that point, we built up enough relationship equity that they did trust us to kind of build the plane as we were flying it.
Mm-hmm.
And so we spent probably about 18 months, and it probably ended up being about 18 months, working with them to just kind of solve the problem for them. And looking back, it was not a very well polished piece of software at that point in time, but it was a lot of like spit and bubble gum holding it together,
Right.
holding it
Right.
together.
Yeah.
But what was neat about it is we proved that that the problem could be solved. Like this scheduling problem that all these customers of ours had, it's a difficult problem to solve. And there's a lot of like academia who's been trying to solve it. You can solve it theoretically, but it's like, how do you solve it in the real world in a way that,
Mm-hmm.
not computer savvy or less technical folks on the shop floor can understand and can use.
Right.
And so we spent about 18 months working with them kind of on and off on it. And at the end of it, we finally got to the point where we're like, hey, we think we solved this.
Mm-hmm.
And we were going to partner and kind of go do a pre-launch at some of the industry events in their space to figure out if other people actually needed this. And we were very fortunate at that point that that particular client also had a great relationship with a company called Label Tracks, which we might talk about a little bit more, but
Yeah.
was basically an ERP specifically for that industry vertical. And so we got introduced to them and we started working together on, hey, can this problem that we solve for this one customer of yours also apply to the rest of your customers? And the short answer was essentially yes, is that this kind of spit and bubble gum thing that we had built, if we
Yeah.
invested some more time and energy, could be a really good product to integrate with their core ERP product and solve a need that they frankly didn't want to solve. They didn't necessarily have the appetite to go build a brand new scheduling application for their
Right.
customers.
Right.
We kind of went down that path, and then a big thing called COVID happened. We were planning to do. We kind of gotten to the point where it was good enough that we could do like a demo and a video, and it was still very much like a spit and bubble gum thing. But
Mm-hmm.
we're going to do a test with a trade show and go see just kind of what's the interest level. Is this worth investing in? Because we knew if we were going to really go after this, we didn't have the expertise in house, and so we were trying to find what's enough to make us put money on the table, serious money on the table, to go either hire people or bring in a partner to really make it, a true piece of software that we could be proud of. And so we had planned to go to this big trade show in literally March of 2020, which was great timing, as I'm sure
Right.
was for everybody.
Yes.
We had like spent a little bit of money to get this nice prototype built that was like, it looked great. Didn't really work at all, but it looked really great and sell really great. We had this whole we got the even down to getting the notebooks and the pens with the little batch logo, because at this point we'd actually
Mm-hmm.
come up with like a name that seemed fun at the time.
Mm-hmm.
And then all of a sudden COVID happened, and so everything was canceled immediately. And
Wow. Right.
yeah,
Right.
just like we were talking about, even getting your own business off the ground, it's like
Yes.
all plans got thrown out the door as soon as that happened.
Correct. Yeah. Yeah. So when did you know, when was kind of that moment that you knew you were onto something? Like you had something good, you knew it was buildable and potentially sellable.
So we basically, March of 2020 comes around. We basically shelved, to be honest, we shelved Batch for probably about 6 months, because at this point, Batch just, it has a name, but it's not a separate entity. It doesn't have its own team. It's just an idea still. And we wanted to make sure that, Mothership Amend, which was funding kind of the effort and the time and all the activity, needed to be healthy. And fortunately, COVID had, we did really well through COVID and grew, basically doubled the size of the company almost overnight.
Yeah.
And so, but that didn't, 3 to 6 months later, we're like, okay, we can actually revisit Batch and get a sense for the market appetite. And fortunately, working again with that ERP partner, instead of going to a trade show, which you can't do anymore now, we worked with them to identify some of their customers that might be good kind of alpha or beta customers to go and take the software, test it with them. Is it really going to make sense? Do they like it? Do they need it?
Yeah.
Are they willing to pay for it? How much are they willing? All of that type of market testing. So over the summer and fall of 2020, we did kind of a couple projects. I would still call them projects with them, because we were kind of refining the software. And then we finally got to the point in the fall where we had a couple customers using it. They were really happy. It was still really rough around the edges, but it was solving
Yeah.
the problem for them.
Yeah.
And instead of doing like a trade show, we just did a big webinar. We sent out an invite to every single one of this ERP customers, they've got 500 some odd customers around the world. And we knew we were onto something when, they used to average probably 70 to 80 attendees on their webinars, and like
Yeah.
200 something signed up within the first couple hours. And
Wow.
then a bunch of people showed up. And then we just had a simple question at the end of like, hey, are you interested? And do you want to learn more about this? And we had like 50 or 60 companies raise their hand and say, hey, this would be really great. We want something like this,
Yeah. Yeah.
And so at that point, it was a little bit of, we were honestly a little bit terrified at that point because we were selling a little bit of a dream still. It wasn't
Mhm.
really a scalable solution, wasn't really ready for prime time, but that was enough for us to say, hey, we think this thing has legs.
Yeah.
It clearly there's a pain point here because everybody took the time to attend the webinar and they were super engaged. And so it was really in kind of Q4 of 2020 that we at Amend made the decision of putting more real dollars on the table behind this idea. And, we started at that point to exit myself from the core Amend consulting business. We knew it
Mhm.
needed somebody working on it full time. It couldn't be a side. If it was a side project, it would die a
Right.
long, slow death.
Yes.
Um, or, you'd get a few customers and then the customers are going to be strung out for forever and you don't want that.
Hmm.
Um, so we started extricating myself from the core men business. We extricated one other guy who had helped build, some of the initial development, and we still didn't have any software expertise. We partnered up. We had a good relationship with some folks stateside who were starting up actually a development firm over in India at the same time that we were starting at Batched. And so we partnered up with them to bring on a development team for us, which was a whole different learning experience.
Yeah. I
And a lot
bet.
of challenges and pain points there, but we ended
Yes.
up bringing on some partners to help augment the skill set and just started running after it really hard
Mhm.
at that point.
I love that. I love the kind of the audacity, right, to go for it. And like you said, get a couple hundred people registered for a webinar and really just face your fears and dive right in, and keep going. So that's an awesome story and great execution too. I mean, that's credit to you guys to take an idea and then in less than a year have it executed and functioning and taking it and running with it. So
Yeah, thank you. It was certainly, I think if you were like go look up some of the stereotypical startup type things, that we definitely had a lot of those learnings, the grand
yeah.
plan and like the ROI model that we built to pitch, because at this point it was a combination of really putting hard dollars into it. Up to this point, it had been mostly time, and there's a
Hmm.
cost to that, right? But
Right.
it's different than saying, hey, we're committing 6-7 figures worth of money to this over the next 12 months with no revenue associated with it.
Yeah.
But it's funny looking back at those, and it's like, oh yeah, we're just going to have everything's going to be up and to the right the whole time, and by the end of the year we're going to have hundreds of customers. It's going to be spitting out cash. It's going
Right.
to take 6 weeks to build all this stuff. Like, we
Hmm.
didn't know what we didn't know. And so the first, I'd say, like, honestly, 18 to 24 months was just pure survival mode,
Yeah.
of
Yeah.
learning how to really develop a product and put it, deploy a product to your customers. Hiring, we were very fortunate that the first couple of people we hired to work specifically on Bash were tremendous and
Hmm.
wonderful and gave us a lot of grace to learn as we were going. Um, and frankly, as I stepped out of Amend, the rest of the Amend leadership team giving me the grace to learn on the fly as well and figure
Right.
it out. And um, fortunately, though, as we kept going, the big thing that anchored us is like the market wants it, right? And
Yes.
the new bookings kept coming in with customers, and even though it was more expensive and took longer, and the revenue took longer to materialize, we knew that we were still onto something and just had to um, persevere long enough until we got through some of those learning pains and growing
Right.
pains.
Yeah. Well, great. So there's social proof behind it. You're growing it. More and more people are adopting the technology. What led to the decision to sell Batched?
Yeah. Um, I mean, there were a lot of compounding factors, but there was one decision we made probably in 2022-ish or so where I mentioned we had this partner that we've been working with called Label Tracks, and
Yep.
we built a very good relationship with their ownership over the course of those first couple of years. And, we had a kind of a fork in the road. One was like, do we want Batch to be this scheduling system that works with any manufacturing company ever?
Mhm.
And that path would require significantly more investment, would be significantly longer, and
Yeah.
um, significantly more risky, right? And that's, could have worked out very well. Or we looked at it and we said, hey, this thing that we've built is already working really well in this one industry vertical. What if we partnered up with them in a more serious way, made the integration even tighter, started operationally integrating the companies in such a way that would allow us to scale much more quickly in this one market versus scaling kind of slowly in a potentially bigger market.
Yeah.
And at that point, we'd made the decision to go deep into the print and packaging space at Label Tracks at the time.
Mhm.
So when we made that decision, we kind of implicitly, I don't know if we really understood it at the time, to be honest, but
Yeah.
we kind of implicitly made the decision that this wasn't a build and hold forever business, because at some point the market gets smaller, right? And
Right.
it would be much more valuable to an incumbent or someone else that's in that industry. It wouldn't necessarily, like Batch at that point when we made that decision, Batch wasn't going to be a unicorn startup because the market size at some point was going to tap out.
Yeah.
So it could
Right.
still be a really successful cash flowing business, but it wasn't going to be some monster software.
Yes.
And that was for what we needed for kind of our first rep at doing this. That was great,
Mhm.
And we have some dynamics going on within the Amend partnership structure. New partners coming in, and existing partners phasing out into retirement and different roles and things like that. So having the opportunity to get a near-term liquidity event was also really attractive, because
Yes.
for me, I'm still really young and early in my career, and for me, taking a big risk on a huge potential upside would be great, but that's not where everybody was at that point in the journey.
Yes.
So there was a lot of factors that went into that. And so when we made the decision to partner with Label Tracks, we also worked with them to understand where they were going. And it's funny because
Right.
they actually came to us and said, hey, the ownership there was looking to get, they've been doing the business for 30 years. They're looking to retire somewhat soon. And so it's all those factors to say, hey, what if we package these two businesses? And there was a third business we pulled into it as well called Sightline, that we said, hey, we actually think that putting these three things together is a pretty attractive package for somebody who's in this industry. And by doing that, each of the individual businesses would be worth significantly more than if you tried to piecemeal them off individually with,
Right.
Lower revenue, lower profitability, et cetera, et cetera.
Yes. So you make the decision, you decide that you want to sell. So who then do you reach out to get involved in the sale process?
Yeah. So we kind of made the decision, I would say would have been sometime in 2022, the three businesses get together. And at this point, we'd actually involved Brent Rippey from RKCA at this point, because we'd done some work with him in the past, and he actually had a pre-existing kind of relationship with the Label Tracks folks as well. Whole
Okay.
separate story, but there was a relationship there already. And so we kind of got with him and started to lay out, what are some of those metrics and targets that we need to hit as a collective business to get the most bang for our buck when we eventually go to sell this.
Yeah.
And we didn't have a hard and fast timeline at that point, but we were thinking kind of a 24-month path, long enough where the three businesses could kind of somewhat come together and merge, and we had enough time to grow and put some more of the infrastructure in place that would be valuable at an exit.
Mm-hmm.
And so we were very fortunate that we got external folks and advisors involved very early on in the process.
Yeah.
Because looking back, I'm sure we would have loved to go faster and quicker and do more and all those things. But if we hadn't have done that, it would have been a great outcome, but it still, I don't think, would have been the outcome that we ended up getting. And so we end up basically forming kind of like a pseudo company that these three businesses were operating under. And we didn't really have a board or anything like that, but we had the ownership group from each of the three companies was working very closely together to make sure that the end result was fair and equitable, and that we're all kind of working towards a common goal. And honestly, one of the best things we did in that whole process, not to plug something right now, but we decided, even though there were three companies, that we were going to stand up one operating system for the three companies as if they were one. And so we put in EOS, and we put together like a joint leadership team across the three companies, and it really got everybody rowing in the same direction and forced us to make a lot of hard decisions on, you're
Right.
bringing three companies together, how many
Mhm.
people do you really need, and who's the right leadership team to take you through a sale. And yeah, it took us a little bit to get that worked out, but once we did, we started moving way faster.
Yeah, that's great. So do you know, so looking at Batch as a standalone company compared to merging it with Sightline and Label Tracks, do you know what type of difference that made in your multiple that you're able to get
Yeah,
at the sale?
100%. So like rough numbers, I can do it for kind of all three businesses, right? Where
Yeah.
you had Label Tracks, which was this kind of historical business. It was cash flow positive, was kind of steady eddy, but wasn't growing super fast, right?
Yeah.
Because it
Yep.
also had so many customers it could go after.
Hmm.
And so they were looking at somewhere between a 1 and a 2x revenue multiple
Yep.
at that point in time. But
Okay.
then you had, and Label Tracks also was an on-premise kind of legacy type software.
Hmm.
Um, and so then you have these other two businesses, which are high growth SaaS, modern technology businesses. And so, but those businesses in and of themselves are capped on valuation because of market size and revenue potential at some
Yeah.
point, right? So we were looking at Label Tracks looking at probably 1 to 2x. And I think if we could probably get somewhere in the neighborhood of 4 to 5x for Sightline or Batch, respectively. Kind of, they're
Hmm.
very comparable type businesses.
Yeah.
But then you pull them together, right now, all of a sudden you have a much bigger entity, and the overall entity is still growing a little bit slower because of the weight of Label Tracks. But Label Tracks is now a 30-40% a year growth business.
Hmm.
So at the end of the day, Label Tracks, end up getting kind of 4 times what they would have gotten otherwise. And so where
Right.
Batch and Sightline might have been at a 4 or 5x multiple, the way we structure the deal is we end up getting kind of a 13, 14, 15 times multiple on
Yeah.
our piece of the pie. So it's like a rising tide lifts all boats scenario where for Label Tracks to get a good valuation, they needed growth. And for us,
Mhm.
we needed scale. And
Yes.
those were the complementary things that really helped each other and made the deal make sense for
Right.
everybody involved.
Yeah. No, that's great. And you had the scale, you had the missing pieces that you could put together. Sounds like that was a very good idea. And as far as who sort of brainstormed that idea of putting it all together, was that Brent and his group? Was that internal at Amend?
It was kind of, I, I mean, I would like to say there was like some grand meeting of the minds where it all came together, but how these things go, it like happens over a series of time, right?
Yeah.
And
Yeah.
so we had a meeting, right, where it was the three of us. Brent was there, folks from Amend were there, was kind of representative of all the ownership group. And um, what we did was we basically had Brent walk us and team walk us through the exercise. Like, I want you to provide somewhat of an unbiased valuation of each of these three things individually, and
Mhm.
then what do you think it looks like if pretend that these are one business now? What do you do the same exercise? And the
Yes.
math speaks for itself pretty quickly there,
Right.
given the relative size of the businesses to each other. It also, frankly, was compounded at that time because that was during COVID at the height. Valuations were crazy. So
Yeah.
every dollar of extra revenue you can get into a little bit of a bigger combined business, the delta between a standalone sale and a group sale was like even more accentuated. So the numbers that I shared at the time of COVID probably would have been even more significantly different than what they ended up being. But
Right.
um, that really helped. And it honestly really helped that we had taken time for all of the three ownership groups to really get to know and trust each other, because there's only, unless you actually merge those businesses together, there's only so much you can do to force the kind of pseudo combination that we had. And
Right.
so it took several, meetings and taking a lot of time to build relationship with each other and build some relationship equity to the point that everybody trusted that, we're working towards this common objective now, not trying to maximize the value of Batch. I'm trying to maximize the value of the pie, and by definition, that'll make the Batch part better.
Yeah.
But it took some time to get everybody, myself included, into that mindset, right? Because
Yeah.
all I see are the dollars we're investing each month into Batch, and not necessarily see, you don't get the immediate gratification of what that means in valuation.
No. Right. Right. So to that point, of what you just mentioned, obviously, the deal announcements out, the press releases out, you mentioned the higher multiples, but what were some of the low points during the sales process? Maybe some speed bumps that you hit, or some of the rough patches throughout this whole process.
Yeah. I mean, it's kind of, I think that one of the most difficult parts about the sale process is we had decided not to actually combine the three businesses. So even though in the marketplace it was one business, and for all intents and purposes, the way the customers interacted with us, it was one business, but legally, accounting wise, everything else was still separate.
Hmm.
So for the size of deal that we had, we essentially had three times the complexity of everything, three
Yeah.
times the size of due diligence activities, three times the prep for putting your sim together. And, it just adds complexity to the deal. I mean, ultimately, now that it's done, it's worth it, right? But if a deal hadn't
Right.
transpired, it's essentially 3x the work and not
Yes.
necessarily 3x the return.
Yeah.
Um, so that made it more complex. And, looking back, we probably would have done that differently, or would have prepared much differently, because it just takes a lot of time. The
Hmm.
sale process takes a lot of time in general. And now doing it three times worth of work in the same amount of calendar time makes it
Yes.
not always the most fun. But I think the other thing that really, I don't know how much you can really blame like the macro economy and things like that, but we ultimately went to market kind of end of Q1 ish, 2023.
Okay.
So, and that was right around the time where, especially the technology markets, the valuations were
Yeah.
like plummeting and falling off a cliff.
Right.
Interest rates and inflation was terribly high. Interest rates were
Uh,
starting to rise, things like that. And so
mhm.
we went through several iterations of retrading with various buyers throughout the course of the process, to
Wow.
where, you get the LOI number at one amount, and then you come back and it's different the second time and different the third time. And how much of that is really driven by due diligence activities, and how much of that's due to the fact that their lending conditions are changing and the world around them is changing. But the sale process from end to end took us over a year, easy.
Wow.
And
Wow.
that's with basically a year of preparation for us to like get it ready to go to market.
Right.
So there's a lot of low points that come with that, where you're trying to keep, obviously at the same time, you're expected that the business needs to keep growing, profitability needs to keep growing, and you're working a second and third and fourth job trying to keep the deal on the tracks at the same time. So
Yes. Right.
there's just a lot of moments of frustration and also joy when you still, like, you win a big deal on the business side. It's great. You celebrate that, and you got to be able to
Right.
go over and like figure out something on the diligence front. But,
Yeah, that had to be difficult. Throughout the entire due diligence process. And then, looking back on it, were there times, because over a year seems to be longer than the typical sales cycle, or
certainly.
what most people present as the typical sales cycle. So were there times in that where you thought that the deal wasn't going to go through at all?
Yeah, I mean, there was a couple very specific times where we got really far down the path, and then for a number of different reasons, that particular buyer we decided not to go with, and
Yeah.
it was of our volition at that point that the structure of the deal had changed in such a way that we didn't we didn't think it was best for our team, and we didn't think it was best for the customer group at that point.
Yep.
So that's after 6, 7, 8 months of diligence and work, and so that was a very hard decision. But I distinctly remember at one point one of the owners of the other companies called, and they were like, "We just can't do it. We can't do it. It doesn't feel right." And I'm like, "All right, I
Yeah.
trust you."
Right.
And so we had to go back to the well at that point, because as a collective, the businesses were cash flow positive, but we were heavily investing back in the business. Like,
Right.
software, you invest heavily for growth, and at some point you start to reap the benefits of that. But we were looking at basically, if we're not going to sell, then we probably do need to actually combine these businesses together. And
Right.
that's a lot of effort in and of itself. But then how do you continue to finance the growth side of that? Because
Mhm.
largely, we had cash flowed this from proceeds and profits from Amend,
Right.
but we didn't want to do that forever. It's not really fair to some of the newer partners to keep doing that for too long. Um, and so we did have a really, like, in kind of the fall of 2023, we had the decision point of like, if we're going to re-up, it's going to be we got to look at it as another 2 or 3 year time horizon. And
Yeah.
that comes with new investment criteria. And at that point, the debt markets weren't particularly great, because
No.
interest rates were back up at that point. And so you're looking
Right.
at basically everybody writing checks back into the business, which was to go from liquidity event to re-upping and writing a bunch of money back into the business is a pretty big swing.
Right.
Um, but fortunately, while we were basically putting a plan together for how that was going to transpire, we went back and touched base with a couple of the other buyers who had been interested earlier on in the process, just to see like, all right, what does the deal look like today? What do we think in terms of structure? And there was a group that we got back in contact with that we thought would be viable in a good landing spot, most importantly for the team and the customers.
Yeah.
So, that ended up working out. That's the deal that ended up happening. But that still took, once you were engaged, like another 3, 4, 5 months before it actually all gets done. So
Yes.
Fortunately, at that point, the ownership groups of the businesses were able to come together, and we put together basically a financing cash flow plan for the businesses to keep them going through that time period, and we were able to maintain the investment level that we wanted during that time period to keep the businesses growing and profitable and continuing to grow, so that when we ultimately did sell, you get the value of that as part of the transaction.
Yeah, I'm picturing in my head right now, this had to be difficult between 3 different companies, Batch being a pretty new company in and of itself. How did you determine what a good value was for this combined entity? And how did you guys formulate in your head, okay, this is a good sale price for us?
Yeah. The biggest thing that we did, which I think set this whole thing up for success, is when we decided upon selling as a combined entity, right? We knew inherently when that deal was struck that Batch was going to get a better valuation than it would on its own. So we always had to kind of look at it through that lens. Mm-hmm. And then the second was when we decided on the split between the 3 entities. There wasn't like, the bid wasn't for, I'm going to pay X amount for Batch and X amount for Silent, X amount for Label Tracks. And the total is what it is. It was always you're bidding on these 3 companies together, and we had a waterfall of how we were going to break that down amongst the various ownership groups. That we decided upon that in like 2022 when we came together, and we were very fortunate at that time that the way in which those proceeds were split, it basically gave a preference to Label Tracks because it was the bigger of the entities, more stable, had the kind of captive customer base.
Right.
But then up to a certain valuation, they got a preference. But then after that, it was just 3-way split. Even keel across the board, regardless of size and regardless of, profit contribution and things like that. And I think that probably ended up being the decision that saved it, because throughout all like the ups and downs of the deal process, everybody was essentially equally incentivized on the deal. And that meant that if I could help get an extra $1 of Label Tracks revenue, I would do it, even though that doesn't directly impact my cash flow statement for that time period, right? Mm-hmm. It helps the overall valuation, and I know I'm getting a third of that value at the end of the day. And so that helped a ton. And then when we finally got to the sale price, right, it made it very clear and easy for everybody to know what their piece of the pie was. Mm-hmm. And ultimately we got basically got all the owners together and said, like, what's an acceptable return on your investment into this, both from the event folks, but also the other companies. And fortunately, we were able to get a deal done that met that threshold. And we, with the structure of the deal in place, we still have lots of upside on the next iteration when it eventually, it's likely that the combined business that bought it's going to sell again in the, I don't know, nearish term horizon, right? That we get to participate in that as well.
Great. So a second bite of the apple, so to speak, could be in the future.
That's right. Well, and it's like, ultimately we came down, the decision that we were looking at was, if we're not going to do a deal, then we're looking at investing back into this business. Right. And potentially taking on investment from an outside group or individuals to do that. And you're not going to get an open market valuation on that type of a scenario, right? You're going to take some sort of haircut in that event. And so doing a deal in which we do get a second bite of the apple isn't that much different than taking on direct investment, because it's now got a new time horizon and all of that. But doing a deal in which we got to take a good chunk off the table at close, and we have a second bite of the apple, really helped with, like, you got a big ownership group, it's split up, different companies. Some people are ready to retire, some people are super risk averse, some are really pro risk, that it allowed everybody to kind of pick and choose their own adventure on what they wanted to do with their own personal risk profile, which worked out really nicely, and wasn't the case with the structure of the first deal. Part of the reason why the first deal didn't go through.
Yeah. Yep. Yeah. And I can see just from the deal announcement. So it was acquired by Amtech. Looks like that's a portfolio company of Peacock Capital. So,
Yep.
like you mentioned, typical holding period for the new owners, might be a 3 to 7 year, and they can use that, private equity money to fuel
Yep.
growth, to continue to scale the businesses, and seems like now that they are combined and all merged together, continue to scale it even farther. So,
Yep, that's exactly what the hope is and the goal is. And they, it's kind of interesting because as we got to know Amtech was kind of like what we had done with Trilogy or the three companies, but they were like 2 or 3 years down the path from where we were. So like
yeah,
where our
yeah,
businesses were running on like kind of disparate systems, a little bit of bubblegum here and a little bit of brute force there.
right,
They've got a professional management team and they have the systems in place. And, you know, it's like, it's a good landing spot because of those reasons, but also they don't really have competitive products to what we have today. Almost all of our products are complementary to what they have. So a
hmm
lot of times, obviously, you get into the PE world. If you have any overlap, the overlap just gets killed because why invest in two things
right,
that you can invest
right,
in one?
yeah,
And it's turning out to be a really good landing spot, both for the products and the technology, but the team and the people, and
yeah,
that's really what matters at the end of the day.
right, right. Well, good. And from the so when you decided to take Batch to market until the actual close of the deal, looking back on it now, is there anything that you would have done differently throughout that process?
That's a good question. So the list is probably would take the rest of the rest of the evening to put down here,
Yeah.
but we didn't have we debated doing it and we didn't do it, but we debated whether or not we needed to hire a CFO or a controller before we went to market. And I
hmm
think because we were all more like sales and technology focused in the ownership group, that I think we underestimated the value of having a really good financial mind who could handle a lot of the preparation. So I don't know if that's number one, but that definitely was the first thing that jumped out to me. Like we should have done that beforehand.
Yeah.
And honestly, I think we were, if I go back even a little bit before the deal process, it's unique to our scenario, but I would have just combined the businesses together. We were a
Yeah.
little bit scared of that, and like it's going to force really hard conversations. And if you force that to the table, then maybe it blows up. Who knows? But we ended up having all the hard conversations anyways. We just did it over the course of 2 years as opposed to trying to do it all at the beginning. And I think if we, in a scenario like this where you're doing a joint sale of multiple entities together, the more you can bring them together ahead of time, we would have received significantly more value for it, I believe, at least, and it would have made the deal process a heck of a lot easier.
Right. Yep.
Um,
Mhm.
and then the third thing is we were very blessed that the ownership group, like there was just, we basically had it like a napkin. It wasn't really a napkin, but it's basically a napkin that said, here's like what we agreed to as part of this deal, but none of it was really enforcing or
Right.
binding.
Right.
Um, so I think if we had set a little bit more of the rules of the road around like what's the minimum number that each person needs, and what are the non-negotiables for you as part of the deal, both personally and like the number you need to take home, we eventually had those conversations, but doing that at the beginning would have made the deal process a lot easier, so that there wasn't always like let's get together and make sure every one of the 20 people involved all are okay with the new number and the structure and all that stuff. It probably would have enabled us to go a little bit quicker, but
Right.
fortunately everybody was so kind of trusting of each other that it didn't hinder the deal a ton.
Yeah. Well, great. Well, Matt, I appreciate the time. So, as we mentioned at the beginning, Amend Consulting is the firm. You guys are incredible, right? Not only do you provide the consulting work to your clients, but to be able to go and come up with a solution with a product, start a business, grow a business, scale it, and sell it. Pretty amazing. So, for business owners that are looking to get in touch with yourself or with Amend, where's the best place that they can find you?
Yeah, you can certainly find us at the website, amendllc.com. If you want to reach out to me, it's just Murphy at amendllc.com is the email. And happy to chat about it at any time, or if I can help with anything, happy to do that as well.
Yeah. Well, great. So, Matt, thanks for the time today. I appreciate the success story and the ups and downs of growing and selling a business. We definitely appreciate your insight there.
You got it. Thanks for having me, John.
Yep.